All right, we are live. Happy Tuesday, everybody. Hope you guys are having a good week so far. I know it's a little early. I know bonds aren't helping you guys. I feel for you there. Hopefully, we'll get a bounce. Somebody needs to mute. I'm getting feedback. Please, thank you. Well, I said thank you. I don't know if you did it yet, or if you've done it yet. Okay, I'm sharing my screen now. Okay, I wanted to start by again going through uh, some of these new tools and the additional screening process I'm doing because it's kind of interesting. What I'm finding is on the really super good news side, it's just weeding out a lot of trades that my signals are giving me. And then when I go back and I look at some of the trades, because I think I told you guys, I save every single trade, whether we make it or not. If I consider it, if it makes the list of something I'm thinking about or that I'm trying to put the right numbers together on, I save it. And then I go back and I critique myself to make sure that the signals are still working. Because there have been markets where certain indicators work and certain indicators don't. And I would say, coming out of summer, I can't say for sure what that is, but things have been very whippy. Getting whipsawed probably a little more than usual. So I'm really loving these extra indicators because what it's doing is it's preventing me from taking trades that we may have taken, and I'm back checking that as well. So that's kind of a cool thing. And then also it's giving me confirmation about getting into trades that maybe, for instance, this one I'm looking at here is Exxon Oil, and you can see it's had a great move. It's a super strong buy signal. It's definitely showing overbought right now, but we still got money trending upwards coming into the stock. Good volume, MACD, everything is solid except, as you know, I tend to try not to buy above the Keltner channel because, again, you can see it hits the top and it works its way down, up and down and up and down and up and down. But not always. Sometimes it goes up and it keeps running up and the Keltner channel opens. And right now what you can see is the Keltner channel is opening for Exxon. I'm showing you Exxon, not that I think for sure we're going to take a trade on it, because I don't know for sure if we can even make the numbers work. Because on this trade, as I'm sure you guys have already figured out, we need to build a lot of room on the downside. Because if it does bounce off the Keltner, we want to try to get ourselves down to where if it falls to the bottom, we're still good. So in this case, I want to get down to around $78. That would give us a lot of room. And just quickly playing around here, getting down to $77, you can see that math is a little bit frightening. But I also want to talk about that because I think, again, I keep going back to this. I'm changing my style a little bit more than maybe I should for the wrong reasons, but they sound like the right reasons. And what I mean by that is, a lot of people would look at, and by the way, this is not a trade I'm necessarily advocating, but this is an example of a max gain of 33, max loss of 217. Oh, come on, seven times. But then, as you know, I subscribe to plenty of other guys, and this is what they do. Because when you build in a lot of room, you either widen the gap or you get so far from the money that the gain goes down. So in this case, the gap's never going to be worse than the difference between the spread. So this is 250. And then, of course, there's a credit here of 33 cents. So 250 minus the credit, now 34. That takes you to a max loss of 217. That's great. That's a nice narrow spread. The problem is, as we got further from the money, the max gain goes down. So if I wanted to try to take this up a little bit, maybe to 78, get a little closer to the money, because I think we'd still be okay there, I can bump this up to 80. Of course, that widens the gap, widens the profitability, raises the break even, and gets it closer to a trade. I mean, that's 4-to-1. Scary, though. And then I can bump up to 77.50, and now again we're less than 4 times. We're at 79.43. It starts getting closer, and then we can. I just have a hesitation going into January at this point, but it's not stupid, and certainly a lot of traders are going into January positions. I just want to try to get us in a little more closer to give you guys some quicker gratification. So this is we go through this incredible screening process, and then when we finally narrow down candidates, then we play with the math, both as puts and as calls. My preference is always as inverted. So as you know, a put is voting for the market to go down, and a call is to go up. So normally this trade would be a call, but if I switch to a call, it becomes a debit trade. Nothing wrong with that at all. Nothing wrong. It's just that sometimes, well, one, I believe, and I'm sorry, I'm not that clear on each broker's requirements, but my understanding is if we have a credit trade, then your broker's going to require less. And certainly in a trade like this, your broker's only going to require $181 in your account, so that's pretty good. Um, and another thing, I don't know that I've ever really talked about ROI, because what we want to learn how to do is calculate the return on investment, and it's not done like a normal thing. Can somebody mute, please? Um, oh, sorry, I'm looking at a question. I shouldn't do that right now. I'm getting myself sidetracked. By the way, keep typing them, but sorry, I got distracted. Um, ROI on options is calculated differently than most probably any other thing. And yesterday I showed you guys that Chuck Hughes trade, and I asked you guys what's your opinion, and I'd say about half of you said, yeah, I would take that trade, and half of you said that trade scares me. And I think you're both right. And I think what was scary was the possibility that you could lose whatever that was. Was it 13 or 14 or $1,500 when the gain was like 350? So there you go. You've got the 9 times world champion options trader recommending a 4-to-1 trade. You mean you could lose 4 times and you could win. However, it had a 33% return on investment, and what that means is your investment is really the capital required to put it in a trade, which is also the max you can lose. Those things are the same. And if I've said this, or sorry if I'm repeating myself, the kinds of questions that I get still are telling me that I haven't done a good enough job really explaining kind of the math behind all of this. So that's why I wanted to do this on this call. So on Chuck's trade, I'm going off memory, but as I recall, there was a max loss of around, I guess it was $1,200, maybe, and the gain was around 350 or something, and the ROI that he advertised in his alert was 32%, and he always tells you that. He always tells you what the ROI would be, and I think I'm going to start doing that. So just for fun, if you look at this one, this is a $181 investment and a $70 gain. So this is about a 30. It's better than 30%. It's like is that my math is not so good right now. 30, 40. Yeah, it's about a 35% return on investment. And it's very rare, even though this is a January date. Let's say we probably get out of it in 30 days. Now, we wouldn't take $69 out of it in 30 days. That would be at expiration. But we probably would take $50 out of it. So if you took $50 out of 181, that's about a 27 or so percent return. That was off my head. I could be wrong. In 1 month. That's pretty darn good. I think I've told you guys over the last couple of years, I've averaged kind of the low months are 8%, the high months are 15. I've had lots of months at 20% return on investment, and so if I can get all my capital working and making that, that's a lot of money. You can get wealthy really fast. So for me, it's always a race to get as much capital as I can working without getting stupid. So I guess what I'm doing here is I'm trying to get your minds to think more like that and not look as much at this. This can happen, and then this is the ugly thing about it is one of these can wipe out 3 of these. We don't like that. But the fact is when you build in so much room, it just doesn't happen very often. Another thing I just want to come clean with is, dust is bothering me. That trade is definitely, but it's not bothering me for me. It's bothering me for you. I still have 100% faith. But again, not a lot of you guys, and by the way, no fault, no negative intention in this comment. I get why you see a $200 being down $200 as scary. I get it. There's nothing wrong with that. That's human. I would also kindly remind you that fear and greed are the biggest killers. Greed, in a case, would be you try to milk every penny of a trade. I'd never do that, as you know. And fear would be you jump when it looks like it's turning against you. Now, if this thing were turning against us at this level and it were expiring on Friday, ugh, we still have a month and more than a month and a month and a week, I think. So lots of time on that trade, and I want to go through that one with you as well. So maybe I'm too transparent, guys. So when I think about dust being down 200, and then I think if I'm you guys and I'm looking at this, and you're thinking, oh my God, that could be another 181. We can't think that way if we're going to be successful. I don't think that way, and I don't want you to think that way. Um, but I can't obviously tell you how you should think. I can ask you how I'd like you to think, but I can't change that. So I'm going to check for questions real quick because I've been rambling for a bit here. Let's see, Rick. Looks like Exxon has strong support at 80, 50, and 100 days, increasing safety of a spread below there, correct? That's absolutely correct, Rick. Very, very, very good. So I see tremendous support here at the $80 level, and that's been going on for quite a while. We could structure a pretty nice trade there, but gosh, I mean, if the risk is not the risk goes down as I go down here, right? Wouldn't you agree? I think I typed somebody this question. If I said to you, um, I will make you $100 bet, and if you win, I'll give you $100. So a 1-to-1 bet. You win 100 or you lose 100 with me, and your odds of winning are 50-50. That's option one. Option two is I will bet you $100, but you can only have 50 if you win, but your odds are 75%, 80%. What would you do? You probably wouldn't take the bet anyway, but sorry, let me get rid of this call. But the point being is your odds are so much greater even though you have less of a return. That's what you have to look at. And by the way, anecdotally, the Apple trade I showed you yesterday, as of this morning, it's up $80, and I only did one contract. So you know, Chuck certainly knows what he's doing, and I think I shared this, and it's kept me out of a couple of trades because this is something that I never really followed before. Um, it's just counter to the way I've traded. But if I'm going to grow as a trader, I got to keep watching, listening, and growing, just as you do. And Chuck's made his money by looking for stocks that just made 52-week highs. Then they pull back to the center of the Keltner, and over the last 6 months, the increase of cash is on an upward trend going into that stock. Those three things together creates what he calls, forgot what he calls it, an expert, a prime select alert. Um, so that's and there were a couple of potential shorts that I was looking at, and but they pulled back, and they pulled back after 52-week highs. So we're starting to avoid those now, and I'll keep watching them. And again, like I said, if it's a short I was thinking about taking, I take a screenshot, I put it in a folder, and then I watch it a few weeks from now. And I'm watching Chuck. I'm watching his trades carefully. So okay. So I hope that all makes sense. Let's see, any more questions? Okay, no more questions. So now, so using Exxon as an example, I think you would all agree, certainly if I were to remove the Keltner channel, because I do think that really sways us. Boy, now that looks like a screaming buy, doesn't it? You've got an upward trend. You've got blue above red. You've got good rising volume. You've got MACD growing. The only thing the concern here would be we're overbought. So we expect when we're overbought that we might pull back here a bit. So we might pull back down to here, which is why we try to build room, because when it pulls back, we get scared and we question ourselves. If we wait too long to have it pull back, we sometimes miss opportunities. So I think I'm stating the obvious here. But so let's go through the additional screening process. I want to show you that, and then I want to show you a couple of other trades that we may have taken that I decided to hold off on because these new indicators that I'm using were telling me it's just not ready, and we would have gotten whipsawed. Okay, so let's go here. Make sure you guys ask any questions that you might have. Okay, so this is Exxon, and this first indicator, and again, I know you guys have probably seen this in the video lots of times. This first indicator is very simple, and that is when the bars are above the line, the trend is favorable, bullish, and when they're below the line, the trend is bearish. It is not perfect, right? I mean, you can see here it was bearish, but then it rode all the way up bullish. However, if you would have entered here and exited here, you still would have made some money. So we don't want to use any one indicator all by itself, but I'm just kind of showing you it went bearish here, and it stayed bearish, 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 and it went bullish here. Big money would have been made in that trade, just using this one indicator. We've been bullish here. It jumped over to bearish for a short time, although the stock continued to go up, which is interesting. Then it went bullish again. So we wouldn't want to use that one all by itself, right? But it's a great indicator. Next, I think, yeah. Sorry, it takes a minute to open these things. It's taking more than a minute, isn't it? Oh, I hope I didn't get knocked off. Come on. Oh no, it's the wheel of death too. Hopefully you guys are still hearing me. Oh, there we go. Okay. All right. So this next, this is kind of almost a four-part, four indicators in one page. The top part is considered an exit swing signal. And so what this would tell you is if you were short here, you might want to get out when it gets above the blue. It's gone bullish. And when it gets up here, it's extremely bullish. However, it could pull back just because when it gets really high, it can stay high for a lot of bars, but there's some risk this thing would pull back. You've got the oscillator here moving really nicely, and really, according to this particular signal, it's still light blue. It's not an absolute go. This is a get ready to go. I think when you look at the indicators, it might be a little bit further along than a get ready to go, but these are what I am looking at. And we've gone to green here on the bullish. Okay, so that all is pretty darn favorable, right? Other than it's not a dark blue. Next, this is what he calls a trend decider. And what I'm looking for when I screen through these, everything begins with me searching for my signals because I now have those automated. I will tell you that if I search any of these others, I get so many hits. It's almost too time consuming. So I start with mine. If I don't find any of my signals in the list of stocks I watch, then I'll try some other indicators and I'll test them against mine. So this one's interesting. Again, this blue line would be the monthly average. The red line is the weekly average, and the green line is the daily average. And to confirm a trend, you want to have the weekly above the monthly and the daily above the weekly. So we have a really strong trend here, and we also have green here. And we have volume kind of at the line, still early in the day. All right, let's look at one more. I think somebody needs to mute.
And your screen is blank.
It is? Oh, okay, somebody's telling me it's lagging.
And the last screen, when you were going through all of those indicators, there was nothing changing on the screen. Could not tell what you were talking about.
Oh boy, what do you see right now?
I see a screen that it says waiting for data, press escape to cancel, but all the fields are white.
Oh Lord. Let me check my signal. And that just started happening in the last few minutes?
It started happening actually 2 screens ago.
Okay. And are you still seeing waiting for screen? Usually,
Yes.
usually I get a message from GoToMeeting.
There it goes. Now it just popped up.
Well, that's a huge lag. Wow, sorry guys. The good news is, not that you want to spend your time watching a recording after you listen to this. It won't be lagged in the recording, obviously. Yeah, I've got great signal, great reception. I wonder if it's on the GoToMeeting side. I'm going to switch screens again in a second, and then if it doesn't lag, if if you don't see what I'm talking about in like 30 seconds after, then I might have to try connecting a different way. Okay, so the next screen is, I would say 100% bullish. And what you can see here is the oscillating lines are filling in. These lines are above the zero line. The bars are blue, and you got a strong reading. So that's a strong buy. Okay, now I'm going to switch screens, and we'll see what happens. This is really the last one we'll talk about. And maybe now I'm not going to do what I was going to do since the screen's lagging so badly. Man, technology's making this difficult. Now, I have a lag now. Come on. Yeah, I might have to close down Metastock. I think that might be the problem. Between Metastock, GoToMeeting, Street Smart Edge, there's a lot of things open. It's a huge ask of the computer. Okay, yeah, I think Metastock, there. Okay. Nope, that's the same screen. I'll be darned. All right, well, okay, let's move on. Well, I hopefully that made sense, and I guess rather than just show you a bunch of stuff, I will explain to you. What I'm doing now is when I get a signal, and I start thumbing through these various indicators, which are really well proven. I mean, the stats behind these, and again, I'm able to go in and take any one of these and back test them over 1 year, 2 year, 3 year, 4 years, and 5 years, and I would say any one of them has a pretty good win rate. When you can get alignment between all of them, or let's say five out of six of them, I think you got a good trade. Is it going to win 100%? No, but it's going to win a lot more than anything else with this level of screening. So this is what I'm doing now. I get my own buy signal. I feel good about it, but before I come out and recommend it, I run it through these screens. And if by, let's say, the second or third screen, I'm not seeing alignment with my own signal, I move on to the next trade. And I'm kind of doing that over and over and over and over. Metastock is working with me to try to automate that process to where I can take my own group of stocks and then filter them through these other trends. That's kind of a big project. It won't be cheap, but I think it'll be worth it. Okay, let's just check for questions real quick. Okay, Mike is asking, can you go through the strategy with the Apple trade? It seems the intrinsic value stays the same as the stock goes up and down since you're buying and selling calls that are in the money. What am I missing? Well, I guess I don't understand the question, Mike. The intrinsic value may go up or down when you enter the trade, but then there's a million other things that create the options to trade much differently than the stock. But that said, if you are and the other thing too is the puts and the calls will move differently based on the strike prices. So let me see if I can open up the Apple trade. I've got it here. Yeah, hopefully you guys will be able to see this. So, Mike, I don't know if I'm not getting the question completely. Might be worth trying to ask it slightly differently, but yeah, clearly when you're talking about these huge prices for the call or the put, if the strike price is 195, and let's just go with the let's just round it to $25 that you're going to pay for this call that you buy, that would say the stock must be at 220. Well, yep, sure enough, it was at 218.43. 210 plus 15 is 225. So you can see right off the bat you have two different well, sorry, that's that's 220, and this one's 225. So the intrinsic values are very different based on the strike prices. And then the next thing, and these are things I hesitate to get into just because it gets technical, it causes confusion, and I'm teaching enough people over the years that when you get confused, you think, oh my God, I'll never understand this, and you give up. The fact is, and Chuck Hughes himself said this to me directly, I have never once looked at any of the Greeks when I take a trade. I don't care. What I know is when the stock price goes up and I pick the right strike prices, I make money. And when the stock market goes down and I went in the wrong direction, I lose money. And the Greeks are the Greeks. That said, there are people that trade off the Greeks. But just as an example, Delta simply means how much is the stock going to move? How much is the option going to move relative to the stock? So I can't see the second number here, but let's just say this is 80 cents. So this is telling me for every dollar Apple moves, my option is going to move 80 cents, which would work in my advantage if the stock is going down, and my disadvantage if it goes up. At this 210 strike price, it's a 60 delta. So they're entirely different. And then you have theta, which is time value, and all this other stuff that we probably shouldn't concern ourselves with right now. But the bottom line to this trade is we had an $1,158 max loss. We had a 342 max gain, and we bought ourselves comfort all the way down to 206. So right about here, right about to where the Keltner line is. I'm sure that's what he was shooting for, because he knows if it hits the Keltner line, it's going to bounce off and go back. That's what we count on. That's why I try to get my comfort, my buffer down to the Keltner line. So we assume that these trades were going to move around the Keltner channel and that it will stay above the bottom of the channel before. Somebody talking?
Yeah, we don't have the Apple. We have the XOS.
Oh Lord, this is crazy. All right, we have a choice. I can disconnect and try another way to connect, or I can just keep talking you through it. Any votes?
Go ahead and disconnect it. Interesting to see.
Yeah.
See, now the Apple is up. The Apple is on the screen.
It is. Well, good. Yay. Okay. Hang on. I actually gotta do something really quick. 2 seconds. Okay, good. So now you're seeing Apple. So what I was showing you here, I'll just quickly review it. We talked about intrinsic value. So if the stock was 195 and the cost of the call was 27, that's really saying that 220, 221 it would be the total value when in fact the stock was 218. So the combined prices here were above the actual trading level, but it's the opposite on the call price, because the price we paid for the option, the strike price was 210, and the premium collected on selling that call was 15, so that's 225, well above the strike price. So, and I guess it's still me not understanding the question that I got. And then we talked about delta. Delta is how much the stock will move, how much the option will move when the stock moves. So the delta is higher on the lower strike price than it is on the higher strike price. Is that always the case? No, but that's the case here. But I just really don't want you guys to concern yourself about that too much. Then we talked about the max gain here is 342. The max loss here is 1158. And I think most of you at this point in your trading careers are going to be afraid of an 1158 max loss. I get that. However, the ROI on this thing is 30%, right? So because we can make 342, we were investing 1158, and that's about a 33% return. That's a good return. So I probably will avoid these higher investment slash max losses for you guys for a while. I'll probably keep showing them to you. Like I said, I'm in this trade. Let me just quickly pull up my position report. Yeah, I mean, I'm up 72 bucks in one day. Well, $92 today on that Apple trade. So there's an example of a stock that hit a 52-week high. You probably aren't seeing the screen yet, sorry. I'm just showing you the position report. And again, it hit a 52-week high. It pulled down back to the middle of the Keltner channel, and that's the buy sign. And then it bounces off and it makes new highs again. And that pattern is very repeatable in many stocks, so that's good. Okay, so since the screen is having a problem, I don't think I'm going to go through the whole process and show you how I'm weeding out trades. I just thought that would be interesting for you guys. I think some of us got filled on Mo, some of us did not. Uh, I did get filled on Mo. It is down right now. It did pull back. PSA I think is nicely up. Yeah, PSA is up 35 bucks, which is nice. And then now we're up on XEC, and gold is up, and big is up. Again, I don't know who's in what. IGV is up the famous $43 or $44. I think we'll get taken out of that soon. Um, so really, everything's performing pretty well. I think our Iron Condor on IWM is down a little bit now, but it's getting really close to even. It's down $12. So this stock is really starting to come around for us. Holex is down just a few bucks, 16 bucks. New trade though. So yeah, I mean, I think we're looking okay here. It's really just about dust, which is it's just not fun. And I literally have to talk to myself every day and remind myself, you're big boys and girls, and you understand how this game is played, and you understand we have till October 16th, and not to worry so much about it. Okay, I'm seeing more questions, and I'm really sorry about my screen, guys. I guess I gotta blame GoToMeeting this time. Okay. My screen movement is super slow, but I've been having network issues. Oh yeah, anybody that's having screen lagging problems, I think we have concluded it's on my side. I'm so sorry. Um, so Mike, when you asked the question about Apple, again, I don't know that I answered it because I don't know that I understood it. Let's see if you re-asked it. Yeah, all I'm getting is comments about screen lagging. Okay, so I don't have any other questions. So if you guys don't have anything else, and since the screen is lagging, I will. What I will do is I'll do a pretty detailed report and a video, and I'm going to show you the screening process and how we're screening out trades and how we're finding more trades. The point that I wanted to make for you is I was super excited that I've been able to automate my searches, which is cool. And then now that I have these new screening tools, even though I'm finding twice as more trades, I'm probably weeding out 3 times as much more. So the hunting has not necessarily gotten easier on my side, but the quality of the hunt is much better. When we shoot something, it's going to be good eating, and much less risk. So, oh, now it says I've lost my connection entirely. Yay. Um, all right, guy. Oh, Dean's asked me if I'm in urban. I did not get filled on urban. I know a lot of you guys did. Urban pulled back after we entered it, but as of yesterday, I think it was up pretty strong. I don't know if this is a lagging screen. You guys can't see it anyway, but I'm showing on this other screen I have that watches all my positions. Uh, Urban's up like 70 cents. So I think that'll be a good trade for you guys. And that one is very minimal loss, very minimal reward. But I did not get in on it. Um, Mike is asking, so the delta is creating the gain. Yeah, Mike, I would prefer not to get into delta. If you want to get that technical, I can give you some things to read. I can maybe set up a one-on-one with you, but it's just really not it's not the right thing to be talking about where everybody's at in their learning curve, and it's not how I trade anyway. It's just outside of my purview. I certainly understand it, and delta maybe is creating the gain. I don't know. I have to go back and look at it, but I just feel like it's not productive for the group. So I apologize for that. Feel free to reach out to me if you want to have a further discussion about it. Um, And then I was going to tell you guys, I can't guarantee that I can make this happen, but if you're in SoCal on October 19th, Metastock is having a conference. They're having some great speakers. One of the guys is the guy that developed the RMO indicators, which is the number one utilized indicator in Metastock, and Metastock's a huge company. And he's actually going to speak. He's a super bright guy. There's 4 or 5 super bright guys speaking. The normal price is $350. They told me I can get in for 99 since I'm a medic stock. I asked them if I could get others in for that price. They said how many. I said I'm not sure, but maybe 5 or so. So if you think you want to, it's in Torrance. So if you think that's drivable, I think it's a 2-day event. I'll send you guys information if you're interested. Just let me know. Any other questions? Let's see here. Did we sell our MA options? Yeah, Jackson, we did. I thought I did a video on that. I'm guessing you're probably up pretty good in that, though. I actually think I may have exited early. Where are you right now on that? That was a good trade. By the way, that was a Chuck Hughes trade. Yeah, it's up. Okay. Yeah, I don't know how much you're up. Chuck hasn't said to exit. I think it hit my 40% or 60% up. I can't remember why I exited, to tell you the truth. Um, but I do think it's probably a good trade to be in, and I don't think you should rush to get out of it. If you want to send me your screenshot of where you're at, and I'll also pull it up on the charts and see what's happening. Okay. Anything else? Okay, I think we'll call it now. Thank you very much, guys. Sorry about the technical issues today. And oh, starting I guess Thursday. Thursday? Today's Tuesday. Yeah, Thursday. There will be a beginner session at 10 a.m. There's a new group coming on. Your calls will still say at 11, but you guys are always welcome to attend the 10 a.m. call. Some of it's going to be really rudimentary for you, but who knows? You might pick up some new stuff. You know, it's like watching a movie. You see stuff. You notice new things in the movie every time you watch it. Um, Rick, you'll be out of the country 10/19. Ah, sorry, buddy. Um, Okay, guys, thanks a lot. Have a good day. Always reach out to me if you have any concerns, questions. I don't want anybody confused or concerned or lost, but you guys are really seem to be getting this stuff. Have a good day. Bye bye.